Like, so we are going to be starting with, for now you have three major topics, or yeah, three major topics left. We are going to be doing the short-term decision making. We start the short-term decision making. We have about 3 or 5 subtopics there. We have the relevant costing, the make or buy, the shutdown decision, the limiting factor, and also the break-even analysis. Okay, so we will try to do relevant costing and the make or buy today. Then next week they will continue with the shutdown decision making, limiting factor, and those ones with you guys. All right. So uh, that is it. That is it. So we'll be starting with the relevant costing, what we call relevant costing. What we call relevant costing. Okay. All right. We said that this is short-term decision making. So it means that the decision that we are going to be making, or the tools that we are going to be using to make the decision, will be for a short period of time. It will not be something that is going to be taken over a year. We have tools for making long-term decision makings, or we have tools for making long-term decision long-term decisions. And we also have tools for making decisions that will last for maybe 3 months, 4 months, or 5 months. It will not be more than a year. So those tools are what we are coming to look at right now. And one of them is what we call the relevant costing. The relevant costing, what we are trying to do is, or what we are trying to look at is that you want to make a decision, you have to determine the costs that are important to that particular decision. The costs that are very important to that particular decision. Okay, you want to start producing pure water. You want to start producing pure water. Okay, you want to start producing pure water. Okay, if you look at your water bill, your monthly water bill is 200 cedis. Okay, but if you start producing the pure water, your water bill will now be 250. Okay, if you want to apportion the water bill to the pure water, how much are you going to be saying that, okay, this is the amount that you have what? This is the amount of the bill that you have consumed as a result of what you producing the pure water. The time that you were not producing pure water, your water bill, your monthly water bill is 200 cedis. You have started producing pure water and the monthly bill is now 250. What will be the portion of the water bill that is being consumed by the pure water production? Or if you want to apportion the water bill, how much will be given to what? To the pure water company?
50.
It will be what?
50
Oh, you have to be sure. How much will be given to the water? How much will be given?
50 or 50.
Okay, it will be 50. Why are we saying 50? Why are we saying the 50? Why 50? Why not the 250, but why 50? Why 50? Sinners, are we here? Why 50? Why the 50 but not 250? Okay. The time that you are not producing the pure water, what is the monthly water bill?
200.
Okay. And you have started producing the pure water now. The monthly bill has now increased to 250. Okay. The cost for the water bill cost for the pure water production is 50, because even if you don't produce the pure water, your water bill every month will be what? Will be 200. So the 200 is not relevant to what? To the production of the pure water. It is not relevant because whether you undertake the production or whether you undertake the manufacturing of the pure water or not, every month you will be incurring a water bill of 200. So what is the additional cost that we are incurring as a result of the pure water production? That is the 50. And that is the cost that is relevant to the pure water production. The 200 is not relevant because we are not incurring the 200 on the pure water production. So the 50 over here is a relevant cost. It's a cost that can be avoided if we don't produce the pure water, or it's a cost that is being incurred directly by the pure water production, or it's an incremental cost to the water bill as a result of what? The pure water production. All right. You have a shirt. You have a shirt that someone want to buy it 200 cedis. Okay. Someone want to buy 200 cedis. And I'm saying that you should dash me. And I'm saying that you have a share that you are no longer using and you want to sell it to someone 200 Ghana cedis. And I'm saying that I want it. How much are you going to sell it to me? Or if I say that I want it, what are you going to tell me?
I'm going to tell you that I can sell it and make money, isn't it?
Okay. Okay, that is also another one. You can also tell me that if I want to get it, I should bring what, 200 cedis because someone wants to buy it 200 cedis.
Yeah.
Someone wants to buy it what, 200 cedis, isn't it? So if I want it, if I really want it, then I should bring the 200 cedis or I should forget about it because we are going to sell it and get what? 200 cedis on it. Okay. All right. So, but if you decide to give this shirt to me for free, it means that you'll be losing what? 200 cedis, isn't it? If you decide to give the shirt to me for free, you'll be losing what we call you'll be losing the 200 cedis, which is called the opportunity cost. Because you are sacrificing the shirt for the amount that you are going to, or you are giving the shirt to me for free at the expense of the amount that you are going to be receiving from it when you are selling it. So you are making a sacrifice of 200 cedis for me, and that is an opportunity cost to you, which sometimes it is called contribution loss. All right. So the relevant question, what we are coming to talk about now is that, okay, you want to go and do wedding, yes, or you have a restaurant, that someone wants to, or you have a hotel that people want to hire it for their wedding. Okay. All right. So without hiring the hotel, what will happen is that every year or every month, your electricity bill is 2,000. Okay. Your water bill is 2,500. Okay. Because the people are coming, you are going to buy a new bed sheet. Okay. You are going to buy a new bed sheet, which will cost 500 Ghana cedis. Okay. Okay. So the people are also coming. It means that you are going to be, since the people are coming, what you are going to do is that you say you want to go and hire generator because you don't want to disappoint the people. You haven't been hiring the generator at all. So, but the people are coming, you don't want to disappoint them. You are going to hire a generator of what? 200 cedis. Okay. You're also going to employ additional supervisors, securities, because of the people that are coming. Okay. Additional security, guys, that will cost you 300 cedis. Okay. If you want to charge the person, what will be the contract cost that you are going to give to the person, or what is the cost that you are going to incur as a result of what? Hiring a hotel to the people who are coming to what? Use it for the wedding. Okay. If you haven't hired the hotel to the people, your electricity bill every month is 2,000. But if you hire it, it is now 2,300. Okay. Without hiring the hotel to the people, every month the water bill is 2,500. But now that you are hiring it, it will be 2,600. Okay. But the bill sheet is the new one that you are buying for the people that are coming. You are hiring a generator because you don't want to disappoint the people. So you are hiring a generator purposely for the people who are coming. Okay. So you don't have additional security over there because of how the place will be. You want to go and hire additional security for the people. The question now is, what are the costs that you are incurring as a result of what hiring the hotel to the people for the wedding? What will be the cost? What will be the cost that you'll be incurring as a result of you hiring the hotel to the people for the wedding? What will be the cost? What will be the electricity cost that you are going to be incurring? What will be the electricity cost? The electricity will be how much? How to be the electricity cost? 2,000 without the hiring of the hotel. After hiring, the electricity bill will now be 2,300. So what is the cost that we are incurring as a result of what? The hiring of the hotel for the wedding.
300.
Okay. Water bill will be what?
100.
Will be 100. Okay. Bell sheet will be what?
500.
500, because we are incurring this purposely for that. The hiring, the hire of the generator, we are doing this because of what? The the hotel that we are giving to the people for the wedding. We don't want to disappoint them. If not for them, we are not going to hire any generator. So we are incurring this particular cost purposely for the what? For the for the hotel or for the wedding. Additional security. This additional security, we are taking them as a result of what? We are taking them as additional hand to the existing security that we are having. If not for the wedding, we are not going to what? Take them and pay them. So this particular additional security will also be seen as a cost that is relating to what? To the hiring of the hotel. So this is what we call the relevant costs. The costs that are peculiar, the costs that are relevant for the decision that you are going to undertake, the costs that you are going to get for the decision that you are going to undertake, the costs that you can avoid for the decision that you are going to undertake, the incremental cost of you incurring that particular decision. That is also, so if you see over here, you can see that the electricity bill has increased by what? 300. That is what we call the incremental cost. The 300 is what we call the incremental cost. So if you undertake the decision, what will be the increase in your existing cost? What will be the increase in your existing cost? Okay. Whenever you are using your own car, you normally buy for 500 cedis. Now your friend is saying that, okay, you people want to do some runnings. Okay, you people are going to do some runnings. Or you do your runnings with the 500 cedis, you also do the runnings. Okay, so you have now realized that, okay, after everything, your runnings and his runnings, after everything, the cost of the fuel now is what? Is 700 cedis. Okay, without your friend going with you, you are going to be spending 500 cedis. So the only amount that you can charge your friend is the incremental cost, which is the what? The 200 cedis. That is what we call a relevant cost. Relevant cost is the cost that is very relevant, or that is very important, or that can be incurred as a result of you undertaking this particular decision. As a result of you undertaking this particular decision. Whenever you are alone, you used to buy food stuff 500 cedis for yourself, which will take you for a month. Now you have your two brothers, and you are now buying a full staff of what? 700 cedis. There is an incremental cost of what? 200 cedis. That incremental cost is a relevant cost for your brothers coming there. So if you want to know the additional cost that you are incurring as a result of your brothers visiting you, that is what we call the 200 cedis, and that is a relevant cost over there. So a relevant cost, you just ask yourself, the decision that I'm going to undertake, what are the costs that are relevant? What are the costs that I'm incurring? Or what are the losses that I'm incurring as a result of what? Undertaking this particular decision. What are the costs that I can avoid if I don't undertake that particular decision? Those costs are what we call the relevant costs. You can see that if you don't want to what? If you don't want to write a CA, or if you don't want to become a chartered accountant, you will not be paying for what? Classes fee or tuition fee, or you will not be paying for examination fee. So the cost of you undertaking the CA journey are the tuition fees that you are paying. The relevant costs are the tuitions, the examination fee, and also the opportunity cost. You can say that the cost of this class, you are sacrificing some things for this particular class. So if not for this class, you should have gone there and get some amount of money from that particular place. If not for the CA, maybe you have been, if not for this class this evening, you should have been doing assignment for some people. But because of the class, you are now telling the people that you cannot help them, and they are going to take the assignments away and give it to someone else. You can see that for the CA, you are losing what? A cost. You are losing a revenue, and that particular revenue can also be seen as a relevant cost of you undertaking a CA. Because it's not for the CA, you should have what? You should have done that particular assignment for the person and get the amount of money. So if we talk about relevant costs, we are talking about costs that are avoidable. Costs that are avoidable costs that you can avoid if you don't undertake the decision. We're also talking about incremental costs. This one normally happens to fixed costs. We're also talking about opportunity costs, the sacrifices that you'll be making as a result of what? Of the decision. And we also talk about cash flows. Okay, there should be future cash flow. So if you have incurred a cost already before the decision, especially research and research and development costs, a cost that you incurred before undertaking the decision are costs that are not relevant, because you can incur those costs and decide not to undertake the decision. So maybe you want to undertake the decision, you want to do some feasibility studies. Okay, the feasibility studies, you have incurred a cost already. You can decide to continue or not to continue. So those costs are called what we call the past costs or the sunk costs. Sunk costs are not relevant. They are costs that are already incurred. So they are not relevant to the decision. They are not cash flows that will be arising or will be incurring as a result of what? Undertaking the decision. So after you have undertaken the decision, what are the costs that you are going to incur as a result of you undertaking that particular decision? The cost can be avoidable costs. The avoidable costs can be labor or material costs. Okay, if you talk about avoidable costs, if you talk about avoidable costs, that are the costs that you can avoid if you don't take the decision. Okay, they are the costs that you can avoid, and they are costs that you cannot avoid if you want to undertake the decision. Okay, you want to, someone is now telling you that you should produce what? You should produce what? Meat pie. Okay, the person says you should produce meat pie. Okay, if the person says you should produce meat pie, you'll be buying what we call the flour. Okay, if you decide not to accept this particular contract, you'll not be buying the flour. So you are buying the flour because of the meat pie. So flour over here is a cost that you can avoid if you decide not to produce a meat pie. But it's a cost that you cannot avoid if you have accepted to what? To undertake the contract or to produce the meat pie for the person. So if you are talking about avoidable costs, we are talking about the costs that are we are talking about those direct costs that you can avoid if you decide not to undertake the decision. Example can be material costs, labor costs, and all other costs that you can avoid if you decide not to take the decision. Another one is what we call the incremental cost. The incremental cost or the differential cost. Okay, the incremental cost. Okay, the incremental cost, we always use the incremental cost for fixed cost. The additional cost that you are going to incur as a result of you undertaking a decision. So maybe right now you have a garage. You have a garage that you are renting for 2,000 every year. So you normally park one car there. So you park only one car there. Now you have acquired additional car, and they are now asking you that, okay, you have to extend the garage because the garage can only take one car. Okay, so you have acquired additional car, and the cars are now two. So you have to ex uh, extend the garage so that you can make a way for the additional car. And the extension has now cost you 500 Ghana cedis. You can see the 500 Ghana cedis over here. It's not a cost that you are incurring as a result of you buying the second car. So this particular cost over here will be seen as incremental cost, will be seen as additional cost that you are incurring as a result of you undertaking a particular decision. The cost that you are incurring right now is 2,000, but because of you acquiring the second car, your cost has now increased to what? 2,500. So the 500 is what we call the incremental cost. The additional cost that we are incurring as a result of a particular decision. So that is what we call the incremental cost. Fixed costs are not what? Fixed. Fixed costs are only fixed out to a certain range of output. Fixed costs are only fixed out to a certain range of what? Output. So fixed costs are being set based on a range. You can say that if you produce 0 up to 50,000 units, the fixed cost will be what? Will be 10,000. But the question now is, if you produce above what? 50,000, what will happen? It means that you have to incur additional fixed costs. You have to incur additional fixed costs. So the fixed cost will be fixed as 10,000 for outputs between 0 to what? 50,000. But any outputs above 50,000 will be what? The fixed cost or additional fixed cost will be incurred. Additional fixed cost will be incurred. It's just like you are staying in single room. Now your brothers have come. You have to move on to what? Chamber and hall. So single room, you are paying 250 per month. Now your brother have come, you are now going to be paying 350. Okay, you can see that your rent has now increased from 250 to this one, and the 100 is what we call the incremental cost. What is the increase in the current cost as a result of the decision that you are undertaking? But if the cost, even if the garage is 2,000, even if you park 10 cars or 20 cars, the cost will still be what? 2,000. It means that there is no relevant cost for you buying additional car. There is no relevant cost because there is no going to be any increase in the existing cost that you are incurring. So that will not be incremental cost. So incremental cost only works for what? Fixed cost. Usually they work for the fixed cost. So what is the additional cost that you are incurring as a result of you undertaking this particular decision? Okay, we also call what? Differential cost. Differential cost. Differential cost. So the differential cost can be a cost like packaging. What is the cost that we are incurring to differentiate this from this one? So maybe you are producing uh, yogurt. Okay, you are producing yogurt, but the yogurt, what normally happens is that you what normally happens is that, okay, this one, if you produce it, you just put it in a rubber. You just put it in a rubber. But what you want to do right now is that you want to do it in a cup or in a bottle. Okay, in a bottle. So if you are doing it in rubber, the cost that you are incurring is 250. Okay, if you want to do in a bottle form now, the cost that you'll be incurring is 300. Okay, the cost that you are incurring over here is 50, and that cost is the cost that is differentiating the bottle and then the rubber. So what is the differential cost? What is the cost that is differentiating this from this? And we also look at opportunity cost. Opportunity cost. Relevant cost supposed to be opportunity cost. Opportunity cost is the cost that you are going to be incurring as a result of you you letting something go for another thing. You letting something go for another thing. Okay. The person says you should produce a meat pie. Okay, flour, you have some flour that, okay, if you don't produce a meat pie, you can sell it for 100 cedis. But now the person is saying that you should produce a meat pie. It means that you are not going to be selling it for 100 cedis again. You are going to be using the flour for the meat pie. So this 100 over here will be an opportunity cost. So it's a cost that you are incurring as a result of what? The decision. So what you are going to be doing is that you say that, okay, if you want me to use this flour for you, you have to pay 100 cedis, because if I don't use it for you, I'm going to sell it to someone for 100 cedis. And that can also be the opportunity cost. Or opportunity cost can also be you are currently using a machine. You are currently using a machine, and will the machine normally generates 5 CD contribution per hour. Okay. Okay. This machine is operating at the full capacity. So you are using 50 hours. Now you want to what? Take 5 hours from the what? The capacity of the machine, or the 5 hours from the hours of the machine, and you want to use it on what? The project that the person has given to you. You can see that if you are using these 5 hours elsewhere, the contribution that you'll be getting on these 5 hours, you will not be getting it again. You'll not be getting contribution on only 45 hours, because the 45 hours of the machine will be used to what? Will be used on the product that the machine is generating 5 CD per unit contribution. But the remaining 5 hours will be used elsewhere. So it means that you'll be losing the 5 CD per hour contribution over here. Why are you losing that? You are losing that because you are using 5 hours of a machine on a different project. So that particular project will be having what we call opportunity cost. We'll be adding a cost of 25 to it, because if not for us using the 5 hours on the project, we should have used the 5 hours to generate a contribution of 25. That would be 5 CD per hour, and we're using 5 hours. So relevant cost should be avoidable cost. Relevant cost should be incremental cost. Relevant cost should be opportunity cost. Relevant cost should be a differential cost. And relevant cost should be a future cash flow. Costs that are already incurred are not what? Relevant costs. All right. So let's look at what we call relevant cost. Okay. Okay. So I've said this already. Okay. I've said this already. Okay. Let's come here. We call something notional cost. Notional cost. Okay. What do we call notional cost? Okay. Notional cost has to do with uh notional cost has to do with maybe if you going to be using a machine, you are going to be using a machine. Okay. The machine that you are going to be using, if you want to rent the machine, you will be renting the machine for 25. Now your father is giving you the machine to use. Your father is giving you the machine to use. You are just trying to say, okay, if I should go and rent the machine, what will be the amount that I'll be getting? Or how much would I be renting the machine? So that particular cost that you are trying to estimate is what we call the notional cost. It's a cost that does not actually exist. But because of a certain things, we are just trying to estimate. It's just a notion that, okay, if we're supposed to pay this amount on this particular machine, how much are we going to be paying? How much are we going to be paying? You are using your own machine. You are using your own machine to do something. The question now is, okay, if I should go out and rent this particular machine, how much will I be renting it? So if you are trying to capture that particular amount, the amount that you are trying to capture is what we call the notional cost. It's a cost that does not exist, but we are just trying to make an assumption of it. An assumption of it. If I'm going to be putting 10 Ghana cedis into a project, and the project is going to be giving me 2 cedis, assuming that I'm investing this 10 cedis somewhere, what will be the interest I'll be getting on it? So if you are trying to calculate the interest that you'll be getting from the 10 cedi, that is what we call the notional cost. That particular cost is not existing, but you are just trying to assume that if this should be the case, what will happen? So whenever you are giving a notional cost in the question, you have to analyze it very well to see either it will be a opportunity cost or it will not be opportunity cost. If you're using your own machine, the question now is, if you don't use the machine on the project, can you use the machine somewhere to generate income? If that is the case, then there will be an opportunity cost for you using a machine instead of you using it to generate income. But if you are not using a machine, you won't use it anywhere. But you are trying to say that, okay, if you should go and rent this particular machine somewhere, you will be paying 50 cedis. The 50 cedis that you are trying to capture is a notional cost, because the machine, whether you use it or not, it will just be there. All right, so if you have a question, read the question very well to know if it is a opportunity cost or it's just a notional cost. It's just a notional cost. Okay. We also have relevant costs should be cash flows. They should be attributable costs, whether variable or fixed. Okay. Let's take the costs that are non-relevant. Okay, let's look at non-relevant costs. Costs that are not usually relevant in management decisions include the following: sunk or past costs. Okay, past costs, I've said that expenditure that you have already incurred. It has nothing to do with the decision. It's not a cost that we are going to be incurring as a result of we undertaking the actual decision. The cost that you are going to incur after taking the decision, that is what we call the relevant cost. But the cost that you incur before taking the decision, they are irrelevant costs. So the first one is the sunk cost. Sunk cost is a past cost, a cost that is already incurred before the decision. Example is a research and development expenditure. Okay. B is absorbed fixed overhead that will not increase or decrease as a result of the decision being taken. Okay, you see that sometimes depreciation will be what? Depreciation will be incurred. Okay, we have a machinery that we are going to be using for 5 years. Okay, 5 years. So the cost is 50,000. Every year depreciation will be 10,000. Okay. The issue is, even if you don't use the machine will still depreciate, because we don't depreciate machine even if only we started using it. As soon as the machine is ready for use, you start depreciating it. If they say that the expiring date of tin tomatoes is 5 years, whether you sell it or not, and tin tomatoes is just in the store over there, after 5 years, it will be worthless. It will spoil. So if they say the machine is 5 years and it is ready for use, whether you use it or not, after 5 years, it will not do anything again. So the question is, even if you don't use the machine on a project, you will be incurring a depreciation. But what we are doing is that we are just trying to apportion the depreciation, which would have been incurred without using the machine or not. But we are just trying to share it or apportion it to the activity that we have used it for. No. Absorbed or apportioned fixed overhead, especially depreciation, is not a relevant cost. All right. Expenditure that will be incurred in the future, we call it committed cost. Committed what? Cost. Okay. You told your landlord that, okay, or you told someone that, okay, you are coming to take a room. So you are coming to take a room. So the room, you are here to take the room, and you are saying that, okay, I'll make a payment of 1,000 for you to know that I'm serious. Although you haven't taken the room yet, for you to know that I'm serious, I'm coming to take the room. And you pay the rest of the amount in the future. Okay, you see that you have committed yourself for taking the room. So you are going to be paying the cost in the future, or you have already paid a down payment of what? 1,000. This 1,000 can be called a committed cost because you are making a commitment. You are making a commitment. So the cost that you are going to be incurring in the future is not a relevant cost, especially they are committed costs. Especially committed costs. The costs that you are going to incur in the future are not what? Committed what? Costs. Are not relevant costs. Sorry. Are not relevant costs. So you say that, okay, I'm coming to buy a car, or you have taken a car from someone and you are going to pay in the future. Okay, that can also be a cost that you'll be paying in the future, can be called a committed cost. A committed cost. So if you are given the question, you have to analyze the question very well to know whether this is a relevant cost or this is not a relevant cost. So depreciation is not relevant cost. Notional costs such as notional rent, notional interest, these are only relevant if they represent an identified loss opportunity to use the premises or the finance for some alternative what purpose. So I've said that already. If you're using your own machine, the question is, if you're not using your own machine, can you give the machine to someone and take money, or can you use the machine elsewhere and get money? If that is the case, it means that you're going to be having opportunity cost. But if you can't use the machine anywhere, you can't say that if you should go and rent this particular machine, you'll be taking or you'll be paying 10,000. So the 10,000 is a relevant cost because you are using the machine for the project. No, that is a notional cost. Okay, let's come to relevant cost relating to a material and also labor. Then we pick a question. All right. Then we pick a question. So we queue the two questions there. We are going to queue those two questions there right now. So don't worry. We'll queue the two of them right now. Okay. Let's come to relevant costs with respect to materials. So the question will be given to you mostly on the material and labor. So you have to determine the relevant cost for these particular items. You see, this is how you determine whether a cost is relevant to a material or not. Okay. Okay. You have phones. Maybe you are into selling of phones. Okay. You are into selling of phones. Okay. You are into selling of phones, and currently you have iPhone 11, which you purchased at 2250. Okay. This is the cost that you purchased the iPhone. So this is a purchase cost. You have purchased this maybe 2 years or a year ago. Now, the current price of the iPhone is 2,500. This is an iPhone. This is phone that you have been selling. This is a phone that you have been selling. This is a phone that you have been selling. If you want to give the phone to me right now, I'm your brother. The best that you can do for me is to give the phone to me at the amount that you have purchased it. But if you are going to replace this particular phone right now, you are going to be spending 2,500. If you want to or if you want to give me the phone, how much are you going to give me the phone? At what price are you going to give me the phone? At what price? At what price? Genius, at what price are you going to give me the phone? You bought it 250 and it's a phone that you are selling. So after you have given it to me, you have to buy a new one. So you bought it 2250 and they are saying that the current price right now is 2,500. If you want to give the phone to me, what price are you going to give me at what price are you going to give me the phone? At what price?
2,500.
2,500, because if you give it to me, you have to replace it immediately, isn't it?
Yes.
Okay. If you also have a shirt, if you have a shirt that you bought 100 Ghana cedis, it's a shirt that you like very much, and I want to take it. The price of the shirt now is 150. I want to take it. And after I've taken it, you are going to be replacing it. What price are you going to give me the shirt? At what price? You bought it 100, the current price is now 150. And I'm saying that you should give it to me. And you are not dashing me. It's not a share that you are not going to buy back.
150.
You give it to me at 150, isn't it?
Yes. But
Okay.
I have a question on. I have a question. So here we don't consider depreciation or anything.
We don't consider this is a material, so we don't consider the depreciation. We only ask yourself that the shirt is something that you are using regularly. Okay, so if you give it to me, it means that you have to replace it. how much will it cost you to replace it? That is the amount that you are going to give me the shirt at. So you don't want to make profit, you don't want to make loss. But if you want the shirt, this is the amount that is going to cost me to replace the shirt. So if you want it, give me the amount so that I can just go to the market and buy it. It doesn't, if you don't like, then it should be there. You are the one who wants it. Yeah.
Okay, but I can also go to the market and get the same thing.
But it will
like
be 150.
New one for
It will be 150.
So
The one
why am
I'm
I going to
giving,
buy
the
a
one
shirt
I'm
for
giving to
150?
you, the one I'm giving to you is not, don't take it that is something that's old. Okay. It's a new, okay. It's just something new that you are, the shirt. The shirt
Okay.
is just a
If that
new
is the
shirt.
case, then.
Okay. The
Okay.
shirt is just a new shirt that you want. Okay.
Okay.
And the cost that is going to cost me to replace it, the amount that is going to cost me to replace it is 150. So if you want it, give me the 150 so that I'll go and buy it. This is the reason why if you go to a shop, the person will tell you that the price is, they will tell you that the price, maybe you go to shop to buy needle. Okay, today, they will tell you that the price is 100. You go the next day, then they will tell you that the price is now 150. You know why they are giving you 150? Because the price of the needle right now, or if they give you the needle, if they give you the one now, it will cost them to replace it at 150. So the question now is, you would have bring the 150 and take it, or you take your money. Sometimes you do deposit. Some of the sellers, if you go there, they will say the price has now increased to this amount. So you have to do top up. You know why they are saying you should do top up? Because that is the current amount that is going to cost them to replace the item that they will be giving to you. So most of those people, they use relevant cost. They use the relevant cost. If you are saying that you are coming to buy this and you are coming for it, the price has not increased. So if we give it to you, we are going to be, if we want to replace it, we are going to be making a loss. So this is not the current price. If you want it, give me that price so that I will just go and replace it. So some people, they will just tell you that, okay, if I want to buy this particular item right now, this is the amount. So just give me the amount that I'm going to buy, just give it to me so that I can go and replace it. Mostly we do that thing for our friends. Whenever you are selling, the person is your friend, you say that, okay, this is the amount that the thing is now currently priced at. So give me that amount, then I'll go and what? And replace it. So they always use the relevant costing. When do we use replacement cost? The first one is when the material is in a regular use. When the material is in a regular use, the relevant cost is replacement cost. Because if I should use the material for you, I'm going to replace it what? Immediately. So if the material is in a regular use, the question will tell you that this material is in a regular use. So if I'm using the material regularly, if you want it, it means that after I've used it for you, I'm going to replace it. How much will it cost me to replace it? That is the amount I'm going to charge you. If you don't want it, then fine, go to the market and buy. So if the material is in a regular use, we use replacement cost. The material will not be not in regular use. The material will not be in regular use, but has a scrap value. Okay. The material is not in regular use, but has a scrap value. It can be sold for an amount. Okay. I have a shoe. I have a shoe that I'm not using. Okay. It's a shoe that I'm not using. But if I'm not using it, it's something that I'm not using it. I don't use it. It's just there. But I can sell it. Someone want to buy it for 20 Ghana cedis. If you want me to give you the shoe, it means that you have to pay me the 20 Ghana cedis. I'm not using the material, but I can sell it. So if you want me to use it for you, it means that I'm not going to be selling it. So give me the amount that I'm going to be selling it. That is it. I have a shoe there. I'm not using it. I haven't been using it, but someone is ready to buy it for 20 cedis. If you want me to give it to you, you give me the 20 cedis. That is all. If you don't want it, then I'll go and sell it for the 20 cedis. So if the material is not in a regular use, but can be sold, the relevant cost is the net realizable value. is the amount that you can sell it, is the scrap value. So if the material is not in a regular use but has a scrap value, the relevant cost that we use is the scrap value. So if we don't use the machine, if we don't use the material for the contract, we can sell it. So if you want us to use it for the contract, then you have to pay for the amount that we are going to sell it. All right. We can also have a material that is not in a regular use. Material not in a regular use. Not in a regular use. And has no other use. Okay. So we can have a material. Okay, I have a shoe that I'm not using it, and I can't use it for anything. I cannot even sell it for anything. If you want to take it, am I going to collect any amount from you? I have a shoe that I'm not using. I cannot sell it. It can't be used for any other thing. It's just there. If I don't use it, then it will spoil. If you want to take it, am I going to take any amount from you?
No.
No. So if the material is not in a regular use and has no other use, it means that if you don't use it for the contract, you are not going to use it anywhere. It will be worthless. So for this one, the relevant cost is 0. So material that has no other use and cannot be material that is not in regular use and has no other use and cannot be sold, the relevant cost is 0. Because whether you use it or not, it will spoil. So you using it has nothing to do, because if you don't use it, it will just be there. It will just be there. So this is about the material. Sometimes you can buy a special material. You don't have the material, you can have the special material. Okay, the special material, the relevant cost is the amount that you have paid for it. So maybe you want me to do pie for you. So the pie, I have to do some mixing. That mixing, I don't have it, I have to buy it. I'm buying that particular mixing because of the pie. So the relevant cost of that particular mixing is the amount that I've paid for the what? The mixing. So sometimes you have a special material, the relevant cost will be the what? Will be the cost, or will be the amount that you have spent in buying the material. Those are for special material. Let's come to labor. Let's come to labor.
Hello.
Yes, yeah.
Yes, sir.
Yeah.
Just a little clarification on the not in regular use material that has no other use. So does it mean that it is relevant, but what you just have to record is 0, no value for it?
There's no
So
value
what
for
I'm
it.
thinking is,
All right.
yes, what I'm thinking is, I wouldn't we see it as an irrelevant cost, because already you've paid an amount for it and you have no use with that raw material.
Okay.
Else you wouldn't be able to sell it up or do anything with it.
Okay. So the relevant cost is 0. That's why I
That's
said
just
0.
Yes.
That's why I said the relevant cost for it is 0. As I said, that one, the relevant cost is 0. I don't know if.
Yes, please. I'm aware of that.
Okay. So for that one, even if. Yeah. See, I come.
Okay. So yes, because it's 0, that's why I'm saying, why shouldn't we consider it as an irrelevant cost? Because since you're not going to record any amount on it, and it's more like you've already incurred cost on that.
Yeah, you can
And
exclude
besides,
it. You can exclude it if you are doing the computation for relevant cost, or you can even put it there and put a 0.
Okay.
Okay. Relevant cost, what they will do is that they will ask you to explain why you include this amount and why you didn't include that amount. So you can put the material there and put dash over there and explain why the dash is there. Okay, so they will give you the items and ask you why you have excluded some of them, or some of them they don't have a cost. So you just take it and put a dash there so that you explain why the dash is there. But you can decide to ignore it at all. All right. Okay.
Okay.
All right.
Thank you.
Okay. All right. Let's come to relevant costs in respect to labor. In respect to labor. Okay. In respect to labor, you have to be very careful. the first question that you have to ask yourself is that, is your workers fully engaged? Are they fully engaged? Do they have a spare capacity? Is there any spare capacity for the contract? If there are no spare capacity, what is going to happen? Okay, so first of all, no spare capacity, or the labor is fully, no spare capacity. Okay, so the people are using, okay, there's no spare capacity. So it means that the people are fully engaged. So right now you want to what? You want the people to work on the other projects. It is likely they will be working overtime. They will be working what? Overtime. Currently, they are working at a full capacity of what? 2,000 hours. Now you have taken you have taken a contract, or you want to undertake a project. The project is requesting for what? 200 hours. Now there is no spare capacity. It means that the people have to work for overtime. So the question now is, what is the overtime that you are going to be paying? So if you are paying the overtime of 5,000, the relevant cost over here is the overtime that you are paying, because there is no spare capacity. The people are working at a full capacity, and you are asking them that they should work for an overtime as a result of the project. So if not for the project, there won't be any overtime. So the relevant cost of you engaging the labor or engaging the workers on the project now is the what? Is the cost of the overtime. So what is the labor cost that you are incurring as a result of the new project? Is the overtime that you are paying. If not for the project, you will be paying overtime. So you ask yourself whether the people have full capacity or they don't have a full capacity. Okay. Let's go to the next one. So if they have a full capacity, then the relevant cost of the labor is the overtime. Or sometimes the company can decide to what? Take the workers from the, they can transfer the workers to the new project, and now they will what? They will find a replacement. So sometimes they can say that, okay, we are going to be moving 2 of the workers over here to the new project. Then we are going to be hiring what? 2 other people to replace them. The relevant cost will be the what? Will be the lower of the 2. So what is the cost of you, or what is the relevant cost, or what is the opportunity cost, or what is the contribution loss that you will be losing if you transfer the people from here to the other place? And what is the cost that you are going to be incurring for bringing or hiring the other people to replace these ones? Okay, so you pick a question like, there will be a question like that you have to consider what you are going to do. You will transfer people from here to that place. How much are you paying them? If you are transferring them from this place, means that they are going to be working there. What is the cost of you replacing them? The relevant cost will be the what? Will be the lower of any of the 2. All right. So let's take it one by one. If the labor is gotten within the company and has an idle time, which can effectively be used for the special order, then the relevant cost is what? Is 0. Okay. Now we are expected to work for 2,000 hours. Okay. But we are working for only 1,005 hours. It means there is a spare capacity of 500. This spare capacity, the company is paying them for idle time. So it means that this 500, though they are not working, they are already paying them for it. So if we have gotten a contract right now, and a contract requests a labor hour of 500, it means that we are not going to be incurring any cost on the contract, because this particular 500 hours, they are not working, but we are paying them. So this particular hours is already paid for. So when there is a spare capacity and the company is paying for the idle time, it means that whether they work or not, the idle time will still be paid for. So if you are using them on a contract, the relevant cost will be 0, because if you don't use them, you still pay for the 500 hours. If you use them, you still pay for the 500 hours. So if you don't use, you still pay. If you use, you still pay. So you are not paying any additional cost as a result of using them on a contract, no. Because if you don't use them, you still pay for the 500 hours. But if the contract is requesting for, or the contract is requiring 700 hours and there is a spare capacity of 500, which is paid for idle time, it means that they have to work for additional 200 hours, which is not paid for. So in this case, the relevant cost will be relating to only the 200 hours. You have to take note of that. So if the company has a spare capacity and the people are being paid for idle time, then the relevant cost is zero, because whether they work or not, they will still be paid for the idle time. This is with the assumption that the idle time is paid for even no work is done. The labor has idle time that can be effectively used for the special order, yet an additional time above the normal working time is required. The relevant cost is the cost of the additional time needed for the job. I've done that, which is 200 hours now. All right. If the labor is within the company and is being fully utilized for existing normal work, and there is a need to divert labor from its current job to fulfilling the special order, then the relevant cost is the normal wages plus any loss contribution as a result of what? Diverting the labor. So if we have people now and we want to take them from that job, it means that we are taking them to go and work for a different job. We can only pay them if they have worked on their current job. Now they are working on a different job. It means that their salary will be transferred to the work that they are doing. But the question is there any contribution that the company will be losing as a result of transferring them to that place? Then you add it. That's what they are saying. So if we have 10 employees, you have 10 employees, you are paying each of them 500 cedis. Okay, now there is a contract. So you are transferring 2 people to that place. Okay, it means that these 2 people will not work on the existing contract or they will not be doing their normal work. So it means that the 1,000 will not be incurred on their normal work. We are transferring the 1,000 to the contract that we have gotten. The question is, if we are transferring the 2 of them, would there be any contribution that will be losing? If the 2 of them are there, what is the contribution that they are generating? So if we are moving them, it means that contribution too will not be getting it. So we add a contribution to the 1,000 over here, and that will be the relevant cost. So it's just like you have 10 people on your farm, and you have a different farm now. So you are saying that, okay, I'm going to be transferring 2 people from that farm to the different farm. The 2 people will not be working on the old farm, so they will not be paid, or the cost that you are going to be giving to them will not be attributable to the old farm. They are now going to be working on the what? On the new farm. The question now is, how much are you going to pay them? The amount that you are going to pay to them will be transferred to the amount incurred on the new farm. Okay, if you transfer them, would there be any damages? Would there be any damages that will be caused on the new farm, on the old farm, as a result of you transferring them? That particular damages or that particular damage would have been taken care of if the 2 people are there. So it means that you are incurring that particular damage as a result of you transferring them to what? To the new farm. If you don't transfer them, that particular damages will not be cost. So you add the damages to their salary, and that will be the relevant cost for that particular site. Okay. If the labor is to be outsourced for the special order, then the relevant cost is all costs involved in outsourcing the labor for the job. So if you are taking the people outside, right now you have a full capacity and you don't want to transfer anybody. You want to hire people from outside so that they will come and work on the contract. The relevant cost is the cost that you incur from bringing those people. What is their salary? Are you paying any agent for their recruitment? Or the cost that you are going to incur to bring them is the relevant cost. If not for the contract, you won't bring anybody. You won't incur those costs. So that will be the relevant cost. All right. Okay, students must note that whereas the above guiding principles are very useful, a thorough understanding of labor remuneration and the basic system employed by a company will be useful in determining the relevant cost of labor, especially labor within the company. Okay, let's come to this one that we take to Okay, the relevant cost of overheads and other cost elements are not specifically related to direct material and direct labor must be strictly subjected to the characteristics of relevant cost to determine their relevance or otherwise. Let's come to tutorial question 1. Tutorial question 1. Tutorial question 1. Who is going to help us with that? Who is going to help us with the reading?
Should I read or the woman should read? Our lady should read.
Oh, wait for us.
Okay. Awaku Limited, right?
Yeah.
Okay. Awaku Limited is a company that manufactures machine parts. Adamu Limited has offered them a year contract to produce a special type of part for one of its machines. Awaku Limited has an existing machine that was purchased about 10 years ago, and it can only be used for the contract offered by Adamu Limited. The machine has so far been depreciated by 10,000 Ghana cedis. Meanwhile, its original cost was 24,000 Ghana cedis. The value of the machine in the books of Awaku Limited is 14,000 Ghana cedis. However, it could be sold now for 7,000 Ghana cedis, or in a year's time for 1,000 Ghana cedis. If Awaku Limited accepts the contract, it would need 4 different types of materials, which are listed below. A and D are in regular use within the company. B could be sold for 2.1 Ghana cedis if not used for the contract, and there are no other uses for C, which has been deemed to be obsolete. Required. A. Complete the relevant cost in respect of the contract offered by Adamu Limited and explain the basis for your answer. B. State the 4 stages of the decision-making process.
Okay. So they are asking us for relevant cost. Okay. So the relevant cost for the contracts. Okay. What are the things that we are using for the contracts? We are going to be using 4 different materials, isn't it?
Yes.
Okay. And they are saying that A and D are in regular use within the company. So it means that if we use them, we have to replace them immediately, isn't it?
Yes.
Okay. 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 What is the material required for? Have we been given the material requirement for the contract?
Yes. So in the small table below,
Okay.
we have in stock
Okay.
1,400 for A, B is 400, C is 2,800, and D is 2,000, all units.
Okay.
Then the required for contract is 500 for A, 1,300 for B, 400 for C, and 1,400 for D, all units.
Okay. So the material A and D are in regular use, isn't it?
Yes.
Okay. How many do we have in stock?
We have 1,400 for A.
Okay.
Then 2,000.
How many is needed for the contract A?
500.
So it means that we can get a 500 from the store, isn't it?
Yes.
Okay. So sometimes the material that you need will not be up to, you have to go and buy it outside. You have to go and buy the remaining ones outside. So let's look at solution to tutorial question 1. So tutorial question 1, Awaku Limited. Okay, so we have the statement of relevant cost. Okay, so we start with materials. So the material you do it, material A. Okay, material A How many quantities are we using for the contract? We're using 500. So after using the 500, you have to replace them immediately. At what price? What price are you going to replace them?
The replacement.
LCD 50%.
Okay. So we are going to be having 500 times 1.5. Am I correct?
Yes.
Okay. That will give us how much?
750.
Okay. Now you come to material D. You look at the ones that are in regular use. Okay, material D. Material D, what is the quantity that we have in stock?
1,400.
We
In
have
stock
to-
is 2.
Okay, and we need what? 1,400. It means that we can get the 1,400 from the store, isn't it?
Yes.
So after taking them, we have to replace it because we use it regularly. So we have to make it the 2,000 again. How do we do it? We have to go to the market and buy it at the replacement cost, which is 2 CD.
Yes.
Okay. So that will give us 2,800. Am I correct?
Yes.
Okay. Let's count to material B. Material B. Material B will be sold for what? 2.1. If not used for the what? For the contracts. And there are no other uses for what? Material C, which has been deemed to be obsolete. So material C there, whether we use it or not, there will not be any cost. Okay. But material B, how many quantity do we have in stock?
400.
400. How many quantity do we need?
1,300.
So it means that we can use 400 in the store and purchase what?
900.
900. Okay. The ones in the store, if we don't use it, what will happen? If we don't use it, we can sell it at what?
2 cities, 10 pesos.
Okay.
Ten
So if,
pesos.
so if we are using it now, it means that we'll be losing how much? If we are using it now, it means that we'll be losing what? 400 times 2.1, isn't it?
Mm.
Okay. So if we don't use it, we are going to sell it for 2.1. So if you want us to use it, then you have to give us the amount that we are going to sell it. Then plus the 900, because we need 1,300 plus 900 multiplied by what? This one we are going to buy it. So we use the purchase price. We are going to buy it. So we use the purchase price of what?
$2.8.
No.
0.75.
0.7.
Okay, I'm coming. I'm coming. The purchase price sometimes they will give you the purchase price as historical cost. Okay. They will give you the purchase price as the cost that you have purchased it some time ago. So this one, I don't know. This is supposed to be the purchase price of stock. So this is supposed to be the price that you acquired them at the time that the time of purchase. This is the price. So let's use the current price as the 2.80. So the purchase price will always be, they will add it as a historical cost. Historical cost. So they will add it as a historical cost. So that is the cost of the material at the time that you purchase it. So let's use the current cost, assuming that the purchase price is the historical cost. Okay. So this is the current price, 2.8. All right. So that will be 2.8. So what will be the total?
You get 840 for the B, the first one.
Okay.
And then you get 2,520 for the second one.
2,520. So in all, I'm getting 3,360. Okay.
Yes.
Material C. Material C. Let's look at material C. Material C, there are no other uses for material C, isn't it? Which has been deemed to be obsolete. The question now is, how many of the material C do we have in stock?
We have 2,800.
So we need 400. So if you use the 400, are we going to incur any cost? Are we going to be incurring any cost for using the 400?
No.
No, because if you don't use it, they will be there and they will get spoiled. So the relevant cost for that is dash. The relevant cost for dash is dash. Okay, let's come to the machine. Let's come to the issue of the machine. That is about the material. Let's come to the issue. The purchase price, take it as the historical cost, the amount that you have purchased them long time ago. So you use the current replacement cost as the current price. Okay. Okay, let's come here. Awako Limited has an existing machine that was purchased about 10 years ago, and it can only be used for the contract offered by what? Adamu. The machine so far has been depreciated by 10,000. Meanwhile, its original cost was what? 24,000. The value of the machine in the books of Awako Limited is what? 14,000. However, it could be sold now for what? 7,000, or in a year's time for what? 1,000. Or in a year's time for what? 1,000. This is a very simple question. This is a very simple statement. This is a very simple statement. Okay. What is the current value of the machine?
2,000.
It's 14,000, isn't it?
We have 14,000.
Okay. They have depreciated it for
It's
10,000.
14.
Okay. And the current value is what? 14,000. Okay. Okay. All right. They are saying that the machine cannot be sold for how much?
7,000.
It cannot be sold for 7,000, isn't it? Okay.
Yes.
If we don't sell it right now and we use it on the machine, we use it on the contract, how much are we going to be selling it in the future?
1,000.
Okay. 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 Let's look at the depreciation. What will be the depreciation every year? Will the depreciation be 2,400 every year?
Yes.
Okay. The depreciation will be 2,400 every year. Okay. Okay. The depreciation will be 2,400 every year. All right. So if we use the machine this year, we are going to be enjoying 2,400, isn't it? Yeah, Albert. See, Albert, your hand is up.
Yes. How did we get the 2,400 for the depreciation?
Okay, okay.
Mm.
It's 24,000. The cost is 24,000 divided by our useful life, which is what? 10 years. So we're getting 2,400. Are you okay now?
But the question says the machine was purchased 10 years ago, and so if
Okay.
you're charging depreciation of 2,400, it means at this point, after 10 years, the value should be zero.
No, the machine was purchased 10 years ago, isn't it?
Yes.
Okay. 10 years ago. The 10 years ago, the
Yes.
machine has so far been depreciated by what?
10,000.
Okay. Okay, the machine was purchased 10 years ago. So up to now, it's supposed to be okay.
So
So
if
the
you're charging
machine,
depreciation of 2,400, it should be
okay,
zero at this point.
okay. So the machine was purchased 10 years, 10 years ago from now, isn't it? Okay. So 10 years ago means from now to the time that the machine was purchased was 10 years. Okay, so that will not be, that 2,400 will not be appropriate. Okay. Okay. I want to use, okay. The machine was purchased about 10 years ago. About 10 years ago. Machine
So
was,
what I'm thinking is
or
the machine was purchased 10 years ago, and so far the depreciation that has been charged is 10,000. So if you want to get the annual depreciation, we divide the 10,000 by the number of years, which is 10. So far, an annual depreciation of 1,000 has been charged. And so if you multiply the annual depreciation of 1,000 per year by the 10 years so far, we should get a 10,000.
okay, 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 okay. The machine was purchased about 10 years ago. Okay, 10 years ago. Okay.
Minus,
Yes, yeah.
on the other side, what I'm also saying is, you see, we said the machine was purchased 10 years ago. So, but then up to now, it has depreciated by 10,000.
Okay.
And the value in the books is 14,000. No, the original cost was 24,000. So it means from now, in the value of the books, since the timeline, the useful life given is 10 years, the value of the value in books is what we are going to use as the cost to depreciate by.
Okay. All right. Okay. And the machine was purchased 10 years ago. So it means that 10 years from now, or 10 years, the machine was purchased, from the time the machine was purchased up to now is 10 years. Okay. And the depreciation charge is what? 10,000. So how do we get accumulated depreciation? It is the annual depreciation multiplied by the number of years that the depreciation has been charged. So the annual depreciation will be the 10,000 divided by 10. That will be 1,000 every year. Okay. And now our machine, our actual cost is 24,000. So what will be the useful life? The useful life will be 24 years. Okay. The useful life will be 24 years. All right. The useful life will be 24 years. Okay. The useful life will be 24 years. Okay. So it means that every year depreciation is what? Is 1,000.
1,000.
Every year depreciation is 1,000. Okay. Okay. Every year depreciation is 1,000. Okay. So if we don't use the machine right now, we are going to be what? We are going to be selling it for 7,000. But if we use it now, we are going to be selling it what? 1,000 in a year time. Okay. What you are going to do is that if you sell the machine now, you are going to be taking another machine to what? To undertake the contract, isn't it? If you sell the machine now, what are you going to do? If you sell the machine now, it means that you need to go and hire another machine to come and undertake the, or to come and go ahead with the contract, isn't it? Are we getting that?
Yeah.
If you sell the
Yes.
machine now, it means that you are going to hire a different machine to come and what? To come and use on the contract, isn't it? Okay. The machine that you are going to be hiring, we are going to assume that the cost of you hiring that particular machine is the annual depreciation of 1,000. Okay. So if you are going to hire another machine, which is 1,000, it means that you are going to be selling this machine at 7,000, and you'll be hiring a different machine of 1,000. The net amount that you'll be realizing is what? Is 6,000. Do we agree? Do we agree to that? Do we agree to the net amount as 6,000?
Go over that one again.
Okay. If we sell the machine now, it will be sold at 7,000, isn't it?
Yes.
Okay. But if we sell the machine right now, it means that we are going to hire a different machine, isn't it?
Yeah.
Okay, the different machine that we are going to hire, we assume that we will be paying 1,000, which is the annual depreciation. If you use the machine for this year, you are going to be using 1,000 out of it. So you assume that you are going to be paying 1,000 for the machine that you'll be hiring. So you are going to sell a machine for 7,000 and you are going to hire additional machine for what? For 1,000. So it means that you'll be realizing 6,000 from the machine, isn't it?
Okay. Yeah.
Is that the case? Do you agree to that?
Yeah.
Okay. Okay. If you agree to that, that is fine. Okay. But they're also saying that in a year time, what is going to happen? You are going to sell a machine for 1,000. We are going to sell a machine for 1,000. Okay. The assumption is that if we decide to use the machine now, we'll be using 1,000 out of the 7,000. So the opportunity cost or the cost that we'll be losing will be 6,000 if we decide to use the machine, and the relevant cost or the amount that we'll be losing will be 6,000. Because if we sell the machine, we are going to rent another machine. So we sell it for 7,000 and go and rent another one for 1,000. It means that at the end of the day, we are what? Selling the machine for 6,000. So if you use the machine for the contract today, it means that you'll be losing what? 6,000. Okay. But the question is saying that at the end of the year, after using the machine, you are going to sell it for 1,000. So it means that if you use the machine today, you will be what? You'll be losing what? 5,000. You rent, if you sell it today, you'll be renting 1,000. Okay. So if you use it today, it means that you'll be losing 6,000, which is the amount that you are selling and the renting fee. Okay. But they're also saying that after using it, you are going to be selling it for 1,000. So it means that out of the 6,000, you'll be realizing 1,000. So you are only losing 5,000 on the machine. So the relevant cost for the machine will be the 5,000 because if you sell it today, you will be renting at what? 1,000, and you also not be realizing the 1,000 that you are going to be selling at the end of the year. But if you use it today, the renting fee will cancel the amount that you are going to be selling it. That will be 6,000. But at the end of the year, you will still sell this one for 1,000. So how much are you losing now? You are losing 5,000. You are losing 5,000. So the relevant cost for the machine will now be 5,000. So machine will be calculated as 7,000 minus 2,000. So that will be 5,000. What will be the total relevant cost? I'm getting 11910. Is that correct? Are we correct with the 119,000? Is it 11909? 11901. Can someone confirm that? Please, can you hear me?
Yeah.
Can that be confirmed?
Hold on.
Confirmed. Confirmed.
Yeah,
Okay.
correct.
So they say the relevant cost, whatever you are going to calculate, you are going to explain. Whatever you are going to do, you are going to explain. So if you are explaining, you take the material. Why are you using the relevant cost of 750? The material A is in regular use, so the relevant cost will be the cost of you replacing it. That will be 500 multiplied by 1.5. So you just explain it like that. The material A is in regular use, and the cost of you replacing it is 750. That is how you calculate it. Material D is also in regular use, and when it is used on a contract, it must be replaced immediately. So the company is going to be incurring the replacement cost to replace it. That is also another one. If you come to material B, they have only 400 in stock. And this 400, if not used for the contract, it will be sold at 2.1. So the relevant cost of you using this particular machine on the contract is the opportunity cost of you using it on the what? On the contract. That would be 2.1 times 400. But the contract requires what? 1,300. So you have to purchase the 900 from the market, and the relevant cost will be the cost of you purchasing the material. If there is any transportation cost or any delivery cost, it will be added to the cost of you buying it, because that is the total cost that you are going to incur to buy the B. Okay, if you come to C, C has no what? No other use. Whether we use it or not, it will still be zero. So if you use it or not, it will be there. You are not going to use it for anything. So it will be there worthless. So the relevant cost is zero. If you come to the machine is depreciated at the end of what? Every year, which is 1,000. So if you don't use the machine on the contract, you are going to be selling it for 7,000. So if you sell it, it means that you are going to be hiring a different machine for the contract. So we assume that the annual depreciation is the amount that you'll be paying for hiring the what? The other machine if you sell this one. So if you sell it 7,000, it means that you're going to spend 1,000 to hire the machine. So it means that at the end of the day, you are selling the machine for only 6,000 if you sell it. Okay, but they are saying that if you use it on the contract, the amount of you hiring, you are going to be saving it. And you're also going to be selling the machine at the end of the year for 1,000. So it means that if you use the machine, you are going to be realizing 2,000, which is the cost service of you hiring a new machine plus the net reservoir value after using it. So that will be the 2,000 you subtract it from the immediate sale now, and that will give you the 5,000. So that is how you are going to explain it. That's how you are going to explain it. Let's take the question 2. Then we move on. For relevant costing, we don't add margin. We don't add margin. Where you say that, okay, you want to sell it at a profit. No, we don't add margin. We just calculate the cost. We don't add margin. We don't add margin. We don't add margin. Okay, the stages is there. The process is there. Let's take the question 2. Then we move on to what we call make or buy. Yeah, then take the question 2 for us.
Okay, question 2. H, a printing company, uses traditional absorption costing to report its monthly profits. It is seeking to increase its business by winning work from new customers. It now has the opportunity to prepare a quotation for a large organization that currently requires a new catalog of its services. A technical report on the resource requirements for the catalogs has been completed at the cost of 1,000 Ghana cedis, and its details are summarized below. Production period. It is expected that the total time required to print and dispatch the catalog will be 1 week. Material A. 10,000 sheets of special printing paper will be required. This is a paper that is in regular use by H, and the company has 3,400 sheets in inventory. This originally cost 1 cedi 40 pesos per sheet, but the current market price is 1 cedi 50 pesos per sheet. The resale price of the sheets held in inventory is 1 cedi 20 pesos per sheet. Material B. This is a special ink that H will need to purchase at a cost of 8 cedis per liter. 200 liters will be required for this catalog, but the supplier has a minimum order size of 250 liters. H does not foresee any other use for this ink, but will hold the surplus in inventory. H's inventory policy is to review slow-moving items regularly. The cost of any inventory item that has not been used for more than 6 months is accounted for as an expense of the period in which that review occurs. Direct labor. Sufficient people are already employed by H to print the catalog, but some of the printing will require overtime working due to the availability of a particular machine that is used on other work. The employees are normally paid 8 cedis per hour. The order will require 150 hours of work, and 50 of these hours will be in excess of the employee's normal working week. A rate of 10 cedi per hour is paid for these overtime hours. Employees are paid using an hourly rate with a guaranteed minimum wage for their normal working week. Supervision. An existing supervisor will take responsibility for the catalog in addition to her existing duties. She is not currently fully employed and receives a salary of 500 cedis per week. Machinery. 2 different types of machines will be required. Machine A will print the catalogs. This is expected to take 20 hours of machine time. The running cost of machine A is 5 cedis per hour. There is currently 30 hours of unused time on machine A per week that is being sold to other printers for 12 cedis per hour. Machine B. Machine B will be used to cut and bind the catalogs. This machine is being used to full capacity in the normal working week, and this is why there is a need to work overtime. The catalog will require 25 machine hours, and these have a running cost of 4 cedis per hour. Dispatch. There will be a delivery cost of 400 cedis to transport the catalogs to the customer. Fixed overhead cost. H uses a traditional absorption costing method to attribute fixed overhead cost to its work. The absorption rate that it uses is 20 cedis per direct labor hour. Profit markup. It applies a 30% markup to its cost to determine its selling price. Required. In order to assist the management of H in preparing its quotation, prepare a schedule showing the relevant cost for the production of the catalogs. State clearly your reason for including or excluding each value that has been provided in the scenario above. Explain how the use of relevant costs as the basis of setting a selling price may be appropriate for short-term pricing decisions, but may be inappropriate for long-term pricing decisions. Your answer should also discuss the conflict between reporting profitability within a traditional absorption costing system and the use of relevant cost-based pricing. That is requirement B. Okay, I'm done.
Okay, thank you. Thank you very much.
This one, they plenty.
This is a similar question, so I see their questions are not that plenty. All right, so they are saying that a printing company uses a traditional absorption costing to report its monthly profit. It is seeking to increase its business by winning work from a new customers. It now has the opportunity to prepare a quotation for a large organization that currently requires a new catalog of its services. A technical report on the resource requirement for the catalog has been completed at a cost of what? Cost of 1,000. Its details are summarized below. The 1,000 is a relevant cost. The 1,000 is a relevant cost. Is 1,000 a relevant cost?
It isn't.
Okay. Why?
It is a sunk cost.
Because
Okay. Okay, so it is a sunk cost. It's a past cost that is irrelevant to the decision. Whether we undertake the decision or not, it has already been what? Been incurred. Production period. It is expected that the total time required to print and dispatch the catalog will be 1 week. Let's take the material one by one now. Okay, 10,000 sheets of special printing machine, special printing paper will be required. This is a paper that is in regular use by each, and the company has 3,400 sheets in inventory. This originally cost 1.4 per sheet, but the current market price is what, 1.5 per sheet. The resale price of the sheet held in inventory is 1.2 per sheet. So what they are saying is that if you want to sell the machine, the cost that they purchased this one some time ago is 1.4. But if you want to replace it right now, the current market price is 1.5. But if you want to sell it, the resale price of the sheet held in inventory is 1.2. This particular inventory is regular, is in a regular use. So what cost do we use? What cost do we use? If the
We use the
market,
market price.
okay, we use the market price, which is a replacement cost. So statement of relevant costing. Okay, so we look at the research will be 0. Okay, so you put the research cost there, the technical report cost, you put it there, you put 0 there. Okay, or you can even decide to exclude it and explain why you exclude it, so no problem. So let's look at the material. So material, which one is that? Material A or B? Okay, we have the material A. So we have the material A. So material A, how many quantity do we need?
10,000.
Okay, but how many quantity do you have in store now?
3,400.
Okay, so if you have 3,400, it means that you have to purchase the 10,000 so that your 3,400 will still be there for you, isn't it?
Yes.
You have 3,400. It means that you're going to be buying 7,600, but you have to replace the machine again. It means that you're going to buy all the 10,000. So you take the 3,400 from your listing, then you also buy. So in other words, you are not going to use any of the one that you have in store. You buy all the 10,000 and use so that the 3,400 will still be there for you. Okay. So the original cost is a sunk cost. The original cost is a sunk cost, which is not relevant because the material is not sold at the same amount, but the current market price is 1.5. The resale price of the sheet held in inventory is, so if you want to sell, this is the amount that we are selling it. This is the amount that we are selling it. Okay, if it should be a material that is not in a regular use but can be sold, then we use the 1.2. So we use a resale price for only the material that are not in regular use, but they can be sold for a value. But this is a material that is in regular use, so it means that we take the 3,400, we buy additional 7,600. Okay, so
Is it 6,600?
6,600. Okay, so that will be 10,000 multiplied by 1 point what? Would that be 1.5?
Yes.
Okay, so that will give us 15,000. So 15,000. So you have to know the price that you will use. If the material is in a regular use, we use the current market price or the replacement cost. Let's come to material B. What are they saying by the material B?
Ernest,
Yes, please.
you are saying you will replace the 3,400 again.
What
with,
you do, what you do is that you are going to be using 3,400, isn't it?
Yes.
and you buy additional what? 6,600.
6,600.
So if you buy like this, it means that you will not be having anyone in stock. You have used everything in the stock.
Mm.
So you have to replace the machine because you have to replace the sheet because it's in a regular use. Some people can come and say, oh, they want it. So you just leave it and go and buy all the 10,000. So you just leave it and go and buy all the 10,000. Are we okay?
Okay.
All right. So that is for material A. Let's look at material B. Okay. Material B. Okay, this is the question. I wanted to say this, but I haven't said it. So thank God that we have this question. You see, sometimes you can be requesting or you can be requiring a material which will be maybe 300. But the people, they were saying that they only sell in a bulk. They only sell in a bulk and they can't sell maybe pieces. So if you want to buy, you have to buy all the bulk. So you might be needing only 300, but they are selling at a bulk. They are selling the bulk and you are buying 400. The question now is the remaining 100, can you use it elsewhere? If you can use it elsewhere, then it means that the relevant cost will be only the 300 that you are using. But if the remaining 100 you cannot use you cannot use it elsewhere, then the relevant cost will be the total 400 that you are buying. So sometimes you buy the material at a bulk or you buy the material in a bulk that the quantity that you are going to be using will be lower than the amount that you have bought. So the question is the excess amount, the remaining quantity of the raw material, is it going to be having any alternative use? Can it be used at a different place? If yes, then the relevant cost is the cost of the material that you have used. But if it cannot be used elsewhere, it means that it has no other use and you are buying it purposely for the contract. So the relevant cost will be the total cost of the material that you have purchased. And that is the situation that we have over here. Okay, this is a special ink that H will need to purchase at a cost of 8 cedi per liter. 200 liters will be required for this catalog, but the supply has a minimum order size of 250. The H does not foresee any other use for this ink, but we hold the surplus in inventory. You can see that we need only 200, but we are buying 250, isn't it? Okay, we need only 200, but we are buying 250. Is that the case, Adam?
Yes, yes.
Okay, but the remaining 50, there will be a remaining 50, isn't it?
Yes.
The remaining 50, is it having alternative use?
No.
So it means that we are buying all the 250 because of the contract, isn't it?
Yes.
So the relevant cost over here will be on all the quantity that you have purchased, which will be the 250. But if the 50 is having alternative use, then the relevant cost will be only the 200 because you can use the 50 on a different project. But this one, the 200 is not having any alternative use. So our relevant cost will be the 250 times. So the material will be 250 times 8. I'm having 2,000. Is that correct?
Right.
All right. So you ask yourself, the excess, the remaining one, is it having alternative use? If no, then it means that you are buying all the quantity purposely for the. Yeah, okay. All right. Forget about what they are saying that the cost of the inventory will be expense. No, it will just be in the store. They are not going to use it for anything because there's no other use. Okay. Let's come to the direct labor. Sufficient people are already employed by it to print the catalog, but some of the printing will require overtime working due to the availability of a particular machine that is used on other work. The employee are normally paid 8 cedis per hour. The employees are usually paid what? X cedis per hour. The order will require 150 hours of work, and 50 of these hours will be in excess of the employee's normal working week. A rate of 10 cedi per hour is paid for this overtime. Employees are paid using an hourly rate with a guaranteed minimum wage for their normal working week. Okay. They are saying that sufficient people are already employed by it to print the catalog. Some of the printing will require overtime working due to the availability of a particular machine that is used on other work. The employees are normally paid 8 cedis per hour. The order will require 150 hours of work, and 50 of these hours will be in excess of the employee's normal working week. 50 of these will be in the excess of the employee's normal working week. A rate of 10 cedi per hour is paid for these overtime hours. All right. Let's come here. How many hours are they using on the contract? How many hours are they using on this particular contract?
From the statements, they need 100.
The machine,
But
the order will require 150.
okay.
Okay. And 50 of these hours will be in excess of the employee's normal working week. So it means that they are going to be doing only overtime of 50.
So the 50 is not part of the 100, they are main working, right? Or
Their main working will be,
hours will be 100.
yes, please.
And then out of the
okay, their main working hours will be 100, then plus the overtime.
okay, yeah.
That will give us the 150. Okay. Sufficient people are already employed by H to print the catalog, but some of the printing will require overtime due to the availability of a particular machine that is used on other work. The employees are normally paid 8% per hour, 8 cedis per hour. The order will require 150 hours of work, and 50 of these hours will be in excess of this employee's normal working week. A rate of 10 per hour is paid for these overtime hours. Employees are paid using an hourly rate with a guaranteed minimum wage for their normal working week. Do you know why they are adding the guaranteed minimum wage?
Because of the overtime.
No, it's not because of the overtime. If they are giving a guaranteed, there is a rate that they will be giving to you. Even if you work less than that particular rate, they will give you the guaranteed one. They will give you the highest one. Okay. What they are trying to say is that the employees are paid for they are paid for idle time. So the 100 hours they are already paid for. So the 100 hours is within their working hours. The 100 hours that they are going to be using is part of their working hours. So we are normally paying them for that. So we only calculate, or we pay them for only the overtime. We pay them for only the overtime. So it means that these people, they have a surplus hours there. They have a surplus hours there. If they don't have a surplus hours over there, it means that they should be working 150 times over. They should be working 150 hours overtime, because they are fully engaged. If they are fully engaged, it means that the 150 hours should be fully an overtime. But since the hours is not the same as the overtime, it means that they have a surplus hours of 100. That particular 100 is an idle time, which they are already paid for. So the relevant cost over here will only be the overtime, which will be the 50 times the 10, which will be the 50 times the 10. But if they are fully engaged, then it means that the hours that is required, is 150. If the people are fully engaged, they don't have any spare hours, it means that the hours that they are going to be using on the on the contract should be an overtime, because they don't have any hours that they can use. They have to work overtime before they can be able to complete the contract. But now they are saying that they can only work for 50 hours overtime. it means that there is a surplus hours of 100 there. Or if the question is saying that they are going to transfer 100 hours from other work, they will tell us. But the best assumption that you can make over here is that there's a surplus hours of what? Of 100. That is why they are working for only 50 hours overtime. So if you are given a minimum guaranteed wage, it means that they will not work for certain hours, but they will be paid for that particular hours. That's why they are adding the guaranteed minimum wage for their normal working week. So they are working under capacity, but we are paying them the maximum one based on the number of hours what available. So our labor over here, our direct labor over here will only be the overtime. So direct labor will only be an overtime of 50 times 100 times 10 rather. That will give us 500. All right. Let's move on to the machine. Okay, supervision. An existing supervisor will take responsibility for the catalog in addition to her existing what? Duties. She is not currently fully employed and receives a salary of what? 500 per week. So an existing supervisor will take responsibility of the catalog in addition to her existing what? Duties. She is not currently fully employed and receives a salary of what? 500 per week. Would there be any relevant cost over here?
There's none.
There's none. Why it will be none?
It's because she already receives 500 cedis per week,
Okay.
and there's no mention of there's no mention of any additional figure that amount that she has to receive as a result of this project.
Okay. Okay. So the assumption is that she's not fully employed, but she's receiving 500 per week. So it means that the 500, the existing work that she's going to be, the additional work that she will be taking will be part of the 500 that he or she is taking. So the supervision will be dashed. The relevant cost for the supervision will be dashed. The relevant cost for supervision will be dashed because there's nothing over there saying that she is going to be receiving an amount as a result of taking the additional work. So if you take the additional work in addition to the existing work, you will still be paying what? 500 what? 500 Ghana cedis. It means that you are being paid for a certain work or you are underutilized. You are underutilized. You are underutilized. Okay. Let's go to the next one. Okay, let's go to the next one. Okay, let's come to the machine. Let's come to the machine. Okay, two different types of machine will be required. Machine A will print the catalogs. This is expected to take 20 hours of machine time. The running cost of machine A is 5 cedis per hour. There's currently 30 hours of unused time on machine A per week. That is sold to other printers for 12 cedis per hour. Let's come here. This is expected to take 20 hours of machine time. The running cost of machine A is 5 cedis per hour. There is currently 30 hours of unused time on machine A per week that is being sold to other printers for 12 cedis per hour. Okay, if we decide to continue, selling the hours to the people, what will happen? It means that we have to go and hire a different machine, isn't it?
Mm.
Okay. So if you sell, it is 20 hours that we are using. If you sell the 20 hours to the people, how much are we going to be getting? It will be maybe 20 times 12. I'm getting 240. Okay. It will be 240, isn't it?
Yes, sir.
Okay. But if we go and rent a different machine, we are going to be operating it at what? 5 CD. And it will be the same 20 hours again. So it will be 20 times 5. That will be 100. Am I correct?
Yes, sir.
Okay. So right now, if we are giving it to the people, we are going to be getting 240, and we are going to be hiring what? A machine for what? 100. So it means that we'll be left with what? 140. Okay. So if we are using it ourselves now, it means that we'll be saving the 100 series that will be incurring on the machine. But in that case, we will be losing what? 240. But we'll be saving 100 series and be losing 240. So how much are we losing in all?
140.
140. So relevant cost over here is the what? Is the difference. If you are continuous selling, you'll be selling at 12. But if you go and rent, you'll be operating at 5. You rent at 5. So if you decide to use it yourself, it means that you are going to be saving 5 CD out of this. So the loss will be only 7 CD times the what? The 20. That will give us 140. I hope we have gotten that side. Okay.
Yes, sir.
So the machine A will be 7 times what? 20. That will give us 140. That will give us 140. Let's go to the B.
The B.
Okay.
The
B,
machine B.
yeah.
It requires 25 machine hours at a running cost of 4 cedis per hour. So the relevant cost is 100 cedis.
Okay. So machine B will be used to cut and bind the catalog. This will be used to full. This is being used to full capacity in the normal working hours, and this is why there's a need to work overtime. The catalog will require 25 hours, and this have a running cost of what? 4. So this one, it means that there is no spare capacity on the machine, isn't it? There is no spare capacity on the machine. So since there's no spare capacity on the machine, it means that we have to go and buy these 25 hours, and that will be at 4 CD. Or even if you are using it, you are going to be transferring it from other place to this place. So that will be 100 CDs. Okay. So machine B will be 25 times 4. That will be 100 CDs. Let's go to the other one. Okay. Dispatch. There will be a delivery cost of 400 to transport the catalog to the customer. If we don't print, are we going to incur the delivery cost?
No, sir.
Okay. So delivery cost will be a relevant cost. It's a cost that we are incurring as a result of the printing. So delivery cost will be 400. All right. Let's come to fixed overheads. H uses a traditional absorption costing system to attribute fixed overhead cost to each work. The absorption rate that is used is this one. Do we use absorbed fixed overhead on the fixed cost? Whether you do this or whether you produce only one thing or not, you still incur the same cost. So even without printing this particular catalog, the entity will still incur the what? The fixed cost. So fixed cost is irrelevant over here. Profit markup, H applies a 30% markup to each cost to determine its selling price. We don't use We don't determine selling price for this one. We are just looking for the cost. So this is not applicable. This is not applicable. So our relevant cost will now be the one that we have calculated. Let's put them together and see what we are going to be having. 15,000 plus 2,000 plus 500 plus 140 plus 100 plus 400. I'm having 181, 140.
Yes.
Okay. Let's look at what the question is saying. They are asking some question over here. You can see that for relevant costing, we don't include what? Fixed cost, which is actually a cost of you what? Or which is part of the full production cost. So for relevant cost, we don't apply the principle of what? Full production cost. There are certain costs like depreciation. Since you are using the machine on the contract, it means that that portion of the depreciation, you are using it, but we don't consider it. Since you are also using since you're also producing this particular contract, it means that part of the fixed cost will be what? Will be attributable to it, but we don't do that because it's not a cost that is relevant to the contract. Okay, explain how. Okay, we have already explained how we are able to exclude and also include some of the items. So that one, it is there. After including them, you just explain why you are including this particular figure and that one, like the explanation that I've given. Okay, explain how the use of relevant cost. Yes, yeah.
I beg, I think the issue that you mentioned about fixed costs, if it is attributable fixed costs, then you have to use it, isn't it?
Yes, please.
Specific fixed cost.
Yes, please.
But general fixed costs cannot be used.
Cannot be used. Yes, please.
Okay.
All
Just
right.
wanted to clarify.
Okay.
Thank you.
All right, so I want us to look at make or buy, but we can't look at it today. So that will be you people will take that one. Relevant costing is something that is important. July, it was a relevant costing that they like bringing the relevant costing power. Okay, and also the limiting factor. Okay, all right. So let's explain how the use of relevant costs are as the basis of setting a selling price may be appropriate for short-term decision pricing, but may be inappropriate for long-term pricing decisions. Okay, so what we are doing over here is that we are only doing this for what? Just a week. So this is just for a week. So if this is just for a week, this is the cost that we are going to be incurring for doing whatever you want us to do for you. So just give us that particular amount, then we sort ourselves out. Okay, but in actual sense, if you come to long term, we are looking for profitability, where fixed costs and those things will be taken into consideration. We are going to be using part of the machine. Since we are using part of the machine, depreciation relating to the machine should have been captured into the what? The pricing for the contract. But we don't do that. For fixed costs also, part of the fixed costs will also be absorbed into the contract. But we don't consider that because they are irrelevant costs. In actual sense, if you're using a relevant costing for long-term decision making, you end up making a loss because the pricing does not take into consideration fixed costs that are not directly attributable to the contract. So how do you recoup those fixed costs? If you are charging your price based on relevant costs, how do you recoup your fixed costs? You see that you'll be making a loss. You'll be making a loss. So it is good for one-off contract, something that you just do and remove your eye. It is good for the short-term decision making, but for long-term, where fixed costs, depreciation, and other overheads are important, are also going to be incurred by the company, it will not be appropriate because if you are using relevant costing without factoring your fixed costs, how do you get the money to settle the fixed costs? That will be very difficult. And that is what the question is talking about. So for relevant costing, we don't take into consideration the fixed costs that the company are going to be incurring, the operational fixed cost, the rents the company is renting. But since the rent is not directly attributable to the contract, we are not factoring it. But how do we get the money to pay the rent if we are not putting the rent into the pricing? The company will be what? Will be making a loss if they are using a relevant costing. Okay, your answer should also discuss the conflict between reporting profitability with a traditional absorption costing and the use of the relevant cost-based pricing. So the traditional costing, we are taking into consideration the fixed cost. So we factor the fixed cost into the consideration. That is more like the full cost. It takes into consideration the full cost. The relevant costing, we take into consideration only the relevant costs. Fixed costs are not taken into consideration unless they are directly attributable to what? To the decision. But the question, where do we get the money to settle those costs now? That is the problem. All right. So the relevant cost will not be applicable for future pricing. Because for future pricing, we need to take into consideration fixed costs, advertising costs, manufacturing overhead costs, depreciation, rent, salary, and all those things. But we don't take those things into consideration. That is going to be a major problem. That is going to be a major problem. All right. So the make or buy, we can't, if we start, we can't finish today. So it will be appropriate if you guys start next week with these ones. Okay. So I want to show you some question on the relevant costing, which you can try on your own. Okay, the relevant costing question 1. Okay, you can try question 1. Then you send it to me. Okay. Question 2 is also relevant costing. Question 3 is also relevant costing. So I just put the relevant costing questions together. Okay, the question 1, 2 are relevant costing. 2, 3 are relevant costing. So you can try them and okay, I'll just pick them from there and put it on the platform as an assignment. All right. Please, do we have any question? Please, any question? Please, do we have any question? Adam, any question?
No.
Okay. If there are no questions, then I want us to end it over here today. Next week, you guys will continue.
Please, the last things, this thing, the answers, do you have them? The
Yeah,
math
yeah.
script.
They uploaded them, so I will just put them on a page now. I'm coming to download.
Okay. Oh, okay.
Okay. Okay. So that is it. I will see you guys.
But the last time I made it was rough. Person 1 and 5.
Yeah, it is well.
We hope that this time it will be fine.
Oh, it will be cool. Everything will be fine.
Mm-hmm.
All right.
Right.
All right. Okay.
Bye.
All right, yeah.